All right, we're back. This is one I've been really looking forward to getting on. TN from Pendle. So, how are you doing in this crazy market environment?
Yeah, first of all, thank you for having me. The it's been a really hectic last few weeks, and I'm really just glad to see more activities in the crypto space.
Yeah, it's you're welcome anytime. But as I say, I've been speaking to Right Side, who's a complete gem. I really appreciate how they're just really he's really kind of great with getting your kind of product updates in front of people and stuff like that. So I think he's a credit. It's credit to the team. You've got a good one there.
Yeah, I think we're
So
very
the
fortunate to have him with us, and yeah, definitely like the output that he's produced is remarkable.
Yeah, because it's been. I know we touched upon it before we went live, but the it's been a bit of a slow grind, and as we said, we're both extremely happy. I'm sure you'll be a lot more happier than me about it, but it seems like you guys are starting to definitely come up on people's radar, and people are starting to take note that you guys are like this innovative product that's got great product market fit. And I think the scope of the product market fit is only going to increase due to kind of recent developments such as like Shanghai and everything that comes around that. So it's I suppose before we get into it, can you just give us a brief kind of background on your kind of entrance and origin into this space? Just be as vague or as high level as you want if you don't want to give too much away, but just to kind of set the scene about what kind of where you've got where you've came from and where we are now.
Yeah, absolutely. So I actually got involved in crypto relatively early on, so close to a decade now. I was actually a research assistant for a professor, and I was tasked to look into the different business models within the fintech sector. And one of the business models that I was looking into was a remittance business that utilized Bitcoin as a tool for money transfer. So, compared to the other business models that existed back then, I figured that the one that used Bitcoin was offering something very unique because it wasn't just an innovation or an incremental innovation within the business model sense, but it was an entirely different proposition altogether from a technical perspective. So I thought it was very interesting. And again, this was in 2014. And
Oh wow.
fast forward, fast forward, the Ethereum became a lot more talked about, and there was a white paper, yellow paper that I read, and they had an ICO. So for me, that was really when I started to take a more keen interest in the crypto space, more than just like doing basic research. This was me just digging through all the different kind of materials on like from CoinDesk, Cointelegraph, and Reddit, just to understand the technology landscape a little better. So I was actually involved in a couple of projects as community moderator from the very like just back in the days. None of these projects worked out, but it gave me an opportunity to get to know some of the researchers and I guess like the important people in the space maybe a decade ago. So one of them was Loy. Loy eventually became like he founded Kyber, and when he was starting out
Yeah.
Kyber, he asked if I wanted to join the team as one of the founding team members, to which I agreed. So that began. That was pretty much the start of my crypto career in 2017. So this was like a couple of years later. I think Kyber has been a very wonderful experience for me through the stint at Kyber. I was exposed to a number of very talented individuals, and I guess like along the way, they also inspired how I think about product design and how to look at just markets in general.
Hmm.
So I stayed on the Kyber until the end of 2018, 2019 period, because at that point I wanted to take a step back and just look at the different verticals and subsectors within the crypto ecosystem. So this was when I became independent, but I also set up a small team with my current co-founders to just work on different projects. So we had a string of unsuccessful ventures, but eventually we kind of settled with the idea of Pendle during DeFi summer. So the background of it was actually, I guess, like we didn't plan to build Pendle from the very beginning. It was because we were farming all the food coins during DeFi summer. Yeah, the APYs were
those
like
are
10,
those
20,000.
are the days.
Yes, yes. It was so fun, just hopping from farm to farm. But it also occurred to us that there was no way to lock in the rates. And at that point in time, we were just comparing the state of DeFi to a mature financial sector. And it just occurred to us that fixed rate products are actually one of the most important verticals within the financial sector. But it was largely absent in crypto, and DeFi was just like super nascent at that point, right? So that problem statement was worthy enough for us to take a deeper dive. And we started to ideate solutions around that problem statement. Now, if you ask me right now, I still very much believe in the direction that we're heading to, which is just providing fixed rate solutions. And I think how we were thinking about it, yeah, perhaps I can just share a bit more about it later. But we have very specific rationale for our design choices in Pendle.
So just before we get into that, why, for those kind of unaware and just kind of stumbling, and maybe they're completely crypto or DeFi native, and why are fixed rates so important in traditional markets, and why will they be so important in crypto and DeFi?
I think from I guess like taking a risk management perspective, it always helps to have some sort of a fixed rate exposure. So take for instance, if you're a fund manager, you have an obligation to generate some yield. So I think like as a responsible fund manager, you have an obligation to generate yield, and but because you are managing money on behalf of maybe many different individuals, then the risk profile, or like just the risk appetite of the fund, it varies. So at the moment, most of the yield exposure on crypto is very volatile. So today it could be 1%, tomorrow it could go up to, let's say, 10%. So there's always an uncertainty that revolves around the yield in crypto. So coming from the perspective of a fund manager, having some sort of certainty is always good, because I think innately as individuals, there is a I mean we tend to value certainty to some extent. So from our perspective, having the optionality to fix rate, like just from the different types of positions, is a very very strong proposition for fund managers, so that from a risk management perspective, they can choose how they can allocate their resources, maybe 50% fixed, 50% float, and the likes.
Yeah, makes an awful lot of sense. I suppose if anyone's kind of just used to the Aves and compounds of the world, they'd just be so kind of aware of variable rates, and obviously great in a bull market when there's huge demand side and huge limited supply side and things like that. But yeah, locking in that fixed rate, I don't think the likes of Yarva and Compound have cracked it. I know they've spoken quite publicly about wanting to crack it properly, but yeah, I don't think they're yet there yet. And I think this is where you guys come in. I think it's I suppose let's get to it, right? So could you try and give us a high level, like an elevator pitch, or just overarching, what is Pendle for those that are currently unaware, or they might have seen it come across the timeline? I guarantee they've seen it come across the timeline over the past couple of weeks.
Yeah. So simply put, Pendle is a venue for the tokenization and the trading of yield. So with Pendle, users can hedge and speculate on yield. So yield, I guess it's a very common term within crypto, and how yield comes about can be from various sources. When you, let's say, deposit asset on a money market like Aave Compound, you're entitled to some lending yield. And then if you deposit assets into an AMM pool, let's say like Uniswap or Trader Joe, then whatever activities that happen with against the pool, then you're entitled to some swap fees, and those swap fees are like trading APYs. So these are yields that we tokenize on Pendle and allow people to trade or speculate on it.
Yeah, makes a lot of sense. And I suppose if people are, I suppose a really tangible one for a lot of folks would be the GLP yield. So GLP's liquidity pool token, so again, kind of access, again, exposure to the underlying LP that people can trade long or short against on GLP. Kind of the darling child of the most recent bear market was really good revenue coming through there. Some actual great product market fit, real kind of yield or whatever they want to call it these days coming through the protocol. But you guys have actually implemented that, so I'd love to get into that, and I'd also love to get into kind of the reasons and the kind of factors that drove Pendle V2 development, even down to its interface design. And I'm going to shout this out now because I think it's absolutely fantastic. The kind of the onboarding, the education around the PTs and YTs, I think you guys have pulled that off probably better than anyone else I've seen with a somewhat novel and unique product that people need that education on. So kudos on that. So like kind of to recap on that kind of question, it's kind of what were the kind of factors that drove the development of the new kind of Pendle V2, even from a design perspective of the protocol, and then even down to interface and kind of the educational points as well.
Mm-hmm. Yeah. So in regards to V2, there were actually a few important features that we have incorporated. So the first important change in V2 is the AMM. So with V2 AMM, I think like our experience from V1 shows us that impermanent loss is actually one of the more significant considerations for liquidity providers. And as a trading venue, without good liquidity, we can't support big trading sizes, and then that would become a bottleneck. So when we were thinking about a V2 design, AMM and impermanent loss became sort of a priority. So with regards to the AMM in V2, we've structured it such that impermanent loss is generally minimized, and we achieve this by pairing the assets in the pool and the two assets in the pool to be highly correlated. And that means, so as an example, right, assets that are highly correlated are like USDC and USDT. When you put these two assets in the same pool, because the value of these assets are so highly correlated, ultimately they're all pegged to $1. There's very unlikely going to be any kind of strong deviation unless like a major event happens. Now, going back to V1, so in the case of V1, because of Pendle like V1 because of the way like yield bearing assets are tokenized. So just for a bit of context, when a yield bearing asset gets tokenized on Pendle, PT, which is the principal token, and YT, the yield token, are the two outputs. So again, like when you deposit a yield bearing asset like stETH, you would get a PT stETH and a YT stETH. Now, the PT stETH represents the zero coupon bond of the yield bearing asset, basically the principal component, right? And then the yield token, the YT, represents the yield component of the yield bearing asset. So because of the nature of the product, in V1, we needed to have two different pools for these two different assets. So there's actually there was a PT pool and then there was a YT pool, and these were hosted on different venues. If a user wanted to trade YT, they would have to go to Pendle, and if they wanted to trade the principal token, they would have to trade it on Sushi or Trader Joe. So this became like a very, very bad user experience for users and also liquidity providers, because if they want to have, let's say, if a trader wants to have exposure for PT and YT, they would have to do it at two different venues. And the same for liquidity providers. If they want to provide liquidity to earn some yield, they would have to do it on two different venues. So with Pendle V2, we consolidated all the liquidity on Pendle. So whether you're trading PT or YT, you're trading against the same pool. Now the makeup of the pool consists of PT and its underlying. So the earlier point about the pool not having a very significant impermanent loss is a result of the derivative of the PT against the underlying, which in this case could be a GLP or stETH. Now, when you put these two assets in the same pool, because one is a derivative of the other, the price movements will likely be very much in tandem, and that's why the impermanent loss is quite negligible. Now, importantly, right, if the liquidity provider stakes the asset in the pool until maturity and only withdraw the asset after maturity, right, there's actually no impermanent loss. And I think this is one of the more important propositions that we're offering to liquidity providers. So this is for the AMM part, right? And I think the other thing about the AMM is that with Pendle AMM, users actually have a lot less opportunity costs, because AMM on Pendle allows for the accrual of yield and rewards from the underlying protocol. So effectively, right, if you deposit, let's say like USDT from Stargate into Pendle, you are entitled to Pendle rewards and Stargate rewards. So you're not giving up any kind of reward from Stargate. Yeah, so I think these are the few factors that we have thought about and incorporated into the Pendle AMM design, which makes it what it is today. So this is, again, like on the AMM part. And then the second important design that we've introduced in V2 is the permissionless nature of it. So because like from our standpoint, we think it's important to allow for the protocol to support permissionless listing. And from a scaling standpoint, we think that this is one of the more important features that we need to have, because there are so many different types of yield-bearing assets. And right now, I think our team is probably the bottleneck, because whenever an asset wants to get listed on Pendle, they will have to consult the team. We'll have to study the contract and write a new forge contract for the asset. So at the moment, the Pendle V2 allows for permissionless listing, but currently we're still working on the UI for developers or protocols to very seamlessly set up a pool and list their assets. So we'll get to it perhaps at the end of this year. And of course, like with Pendle V2, the third major improvement that we've introduced is the simple UI and pro UI. So basically having these new interfaces to cater to a wider range of audience. So again, like one of the most consistent feedback that we've gotten from V1 was just how difficult the product was. And it was very difficult for users to navigate the product. And understandably so, right? Because with Pendle, there were so many different kind of terminologies. There were YT, PT, implied yield, underlying yield, and all these things that might not be as intuitive to someone who is not a trader. So with the launch of V2, we have a simple UI in place with the intention of abstracting away all the different types of derivative concepts so that users can get just interact and have positions on Pendle within within 5 clicks. So collectively, I think these are just some of the more important changes that we've introduced to V2. And to a large extent, I think over half of the, around half the transactions that happen today took place on the simple UI.
Check if that's the right page. So the beginner, the simple kind of section as well. Can you kind of talk us through this? So users will land on here. It might be the first time they've seen a few people talk about Pendle. What's going on here? They land on the simple UI. So what's going on for users like at a high level to be able to get these assets at a discount? Because I think it's a great way of putting it as well. So we click to the discounts page. Maybe we can use USDT for an example here.
Mm-hmm. Yeah, so in this particular market, the USDT expires 27th of June 2024, and between, like, if you buy some USDT at a discount today, the published discount rate is 4.27%. Now, if you go ahead and input, let's say like $100 worth of USDT, the right column is going to display the amount of earning that you can anticipate at expiry. So basically like around like $4.30 of earnings. So I mean, with comparison, we think that this is a pretty easy way to display the earnings for user. So if you're comfortable with this amount, all that you need to do is just to scroll down and approve the contract and then just make the transfer.
Yeah, that's awesome. So who do you guys typically see as the user of this particular kind of UI and this interface? Do you see kind of, I don't know, do you see on-chain treasuries or protocols coming over? Like, who's the kind of desired user for this aspect?
Yeah, so for this particular set of product, we see, still like generally people who are more sophisticated trading the PT. Now, at the moment, I think the buy asset at the discount, to be honest with you, it hasn't really resonated with a larger group of the crypto community. So most people are buying PT to lock in the rates, and then when PT price becomes more favorable let's say in the next week or so, then they will trade it. So I think right now, majority of the people who are trading on Pendle are still confined to the more sophisticated group of retail traders.
Yeah, that makes a lot of sense. So can we use, let's use stETH, very topical at the minute. So can we use the stETH from Lido example? So this one's got a maturity of 69 days. And maybe you can talk us through the underlying and implied APY as well, and like what people should be looking out for here if they're kind of considering this specific vault.
Yeah, for sure. So using the stETH pool as an example, so it expired. It matures on the 29th of June this year. So about 69 days away. Now, underlying APY is basically the APY that's published on Lido. So that's 5.72%. And then implied APY is basically it's like the price of the yield token. Now, so in this case, right, when you see that the underlying APY, 5.72%, higher, like it's higher than the implied APY of 4.23%, it tells a couple of things. One is that right now, the community on Pendle thinks that the yield of Lido would come down in the future. So that's why there is a disparity. But if you hold a differing opinion about the yield of Lido, you think that it will sustain at 5.72% in a year's time, then now is a pretty good entry for you because you are paying 4.23% to get the 5.72% exposure. So there is a difference there that you could potentially benefit from. Now, in terms of the YT price and the PT price, it basically refers to the split of the yield-bearing asset in the form of PT and YT. So the PT added to the value of YT will always equal to the value of the underlying. So if you look at the price of PT, 1936, and the price of YT $15. If you add them together, they will equate to the price of the stETH, which is 1952.
Yeah, I love that. So this is really, really interesting for me, and I've been using it just as when I was looking at it. What was great was I could come to Pendle, and there was a lot of speculation on what's going to happen post Shanghai. People can remove their stake. Is staked ETH, is Rocket Pool ETH, is Frax ETH going to be in more of a demand? Is kind of staking participation across the board going to increase? And how does that then affect the yield of those assets? So there's more people that are staking participation increases. If the network activity stays the same, then we should probably predict that the APYs are going to come down. So I was using this as my kind of guide of what the market was setting the implied APY as. So I really, really enjoy using that. So typically, just to kind of recap, so underlying APY now from Lido, and this is a good kind of highlight. So that's kind of 7-day annualized. Yeah. So that's where that's coming from. 5.72%. The market's pricing in that over the next at 69 days of maturity, you're looking at 4.23%. So the market's kind of bearish on yield, if you can kind of put it that way. And then even further out, we've got 5.72% underlying, and then 3.85. So the market is over these different maturities, 69 days, 615 days, and 979 days, definitely, as the title suggests, implying that APY comes down. So what's it been like, particularly around Shanghai? Do you think that was a great catalyst for you guys, and particularly with the V2 and people being able to actually see this thing in action and speculate on it? What's kind of been the mood in the camp? What's going on in your heads following kind of Shanghai? How do you kind of think about staking participation, and how does kind of Pendle play into that?
Sure. So, just looking at the number purely, I think it is quite indicative of what the community is thinking. So, our community of traders generally believe that the yield is going to come down because the opinion is that with the success of the Chapella fork and more deposits taking place, and we will likely see an increasing adoption of LSD as a result, because it's the tech risk is pretty much quite negligible at this point in time. So all that said, right, we do see people speculate on the yield from time to time, but we see even more activity on Arbitrum for the USDT, GDAI, and GRP markets. So a couple of reasons that we're speculating. In terms of yield trading, right, I think it's still a relatively new concept for the crypto community. So a lot of people are still trying to get wrapping their heads around like just yield opportunities on Pendle. Now that means it is unlikely that they will put in maybe 10, 20 grand just to try out. What's more likely is that they will be speculating assets or like just trying to trade the yield in smaller quantum, maybe $200 to let's say $1,000, just to get a sense of how it's like to trade the yield. So because of that, we generally see less activity on ETH, because the cost to reward ratio is it doesn't quite justify that, because the gas fee, especially in the recent days, is quite prohibitive. And even if you are a trader and you spot a decent opportunity on, like, say, some of these ETH markets on on Ethereum, you might not be too incentivized to take actions, because the gas consideration is quite hefty. In comparison, on Arbitrum, when you see a yield opportunity, and because the gas consideration is much more negligible, we see like trade sizes smaller in quantum but more frequent. And as a result of that, I think people are more active in just trading the GLP and GDAI markets.
Yeah, that's really interesting, actually. So what was the first kind of vault or first product where you guys thought, yeah, we've we've stumbled on something like really, really kind of significant here. Was it around the GLP time when there was a lot of speculation around that, and like which one was it that you guys kind of looked at each other and just thought, yeah, we're definitely getting somewhere here?
Yeah, so I think in my perspective, I don't think we have a very, very strong product market fit yet. I think that the recent traction is definitely encouraging, but I have a feeling that if we stop trying to push for narrative, we'll probably see a drop in the trading activity on Pendle. But to your point about just seeing the traction, it started when we listed the Aura RETH RepETH pool, right? So okay, so I'll repeat again. It's Aura RETH RepETH pool. It's a little chunky, but this will yeah. But I think the naming convention, it's hard. I'm not sure how to improve, and it's also like somewhat intimidating. But uh, this tiered asset allows us to coordinate marketing efforts with Balancer, Aura, and Rocket Pool. And because of the joint efforts, we were able to just broadcast and propagate our product proposition to a wider range of audience. Because at that point in time, we were still very small and very few people knew about Pendle. And we had to rely on just other protocols that were much more reputable and bigger than us to try to make a brand for ourselves. So that was when we started to see more just uptick in the number of mentions on social media like Twitter. So over time, that became a playbook, and we started to replicate that kind of launch plan across a variety of different assets. And every time we launch new market, for example, Anchor ETH, we would coordinate marketing efforts with Anchor, get them to see some liquidity, and in their case, they also acquire some Pendle to lock it up for VE Pendle. So over time, I think, yeah, this sort of arrangements help, and of course, I think we've also done we've also invested quite a fair bit of resources in just growth and business development. Yeah, so I think collectively having a greater push on all this fronts just help us see more traction, and then over time it just became more organic.
Yeah, that's a really good kind of growth hack, particularly on your part, because you're drawing in different sets of eyes from different sets of communities across the board there. So that's a really, really smart play. With this, if we use the Rocket Pool ETH pool on Aura, for example, so is this factoring in any emissions that are going towards these pools, and how kind of composable can you be with, I don't know, say if there's a specific LP that's getting emissions directed towards it as well, is because obviously they fluctuate quite a lot on Aura depending on kind of gauges and bribes and voting and stuff like that. So does this factor in all of the above?
Yes. So with regards to the Aura pool, the liquidity providers are entitled to rewards not just from Pendle, right, but also from Aura and Balancer. So effectively, when they deposit the assets, the Aura, like just when they deposit the asset to Pendle, they are exposed to Aura and Balancer. So that all these rewards contributed to the final APY, and that's why the YT is more sizable component of the yield bearing asset, and as a result of that, the PT discount is also more attractive.
Yeah, that's great. I really love that. So I don't know how, if this will work. Forgive me if I say something stupid here, but there's definitely an uptick in interest in the concentrated liquidity AMMs. Everyone seems to have, as soon as the Uni V3 licenses ran out, Trader Joe have got their own thing going on, which is great. Is there room for concentrated LPs on here? Like, I'm thinking maybe if it was an Arrakis defined range or something like that, would that be a product that you guys could integrate, or would it be too many moving parts?
I think it's possible. So for this is certainly something that I'll be keen to explore, just to work with a very dedicated market maker, an on-chain market maker, to manage the strategy. So perhaps one possibility is to have a vault strategy that manages positions on Pendle, maybe to a specific pool, and for something as simple as like if the yield token price is trading at X, and then sell it. If it's trading at Y or less than Y, then buy it. Something like that would be quite interesting. Yeah, whether it's concentrated liquidity or just allowing users to long or short yield, those would be something that would be interested in.
Yeah, I love that. Love that. So, what's the kind of token dynamics with Pendle currently? Have they changed recently? What's the kind of value proposition around the token? If we're okay to get into that.
Mm-hmm. So Pendle token on its own is a useless governance token. So there's no utility to just holding Pendle, right? But Pendle can be locked up between 1 week and 2 years for vPendle. Now, vPendle has 3 different utilities. One is that it functions as a multiplier to the like your liquid, like if you have an LP position, if vPendle entitles vPendle functions as a booster. Now, it depends on the amount that you have, but the maximum booster that you can expect is 2.5 times the base APY. Number 2 is that by becoming a vPendle holder, you have the voting rights to channel incentives to different pools every week. So yeah, basically every week there is an amount of liquidity incentive that the protocol can utilize to incent the APYs of different pools. And the distribution of the incentives is up to the community of vPendle holders. So at the moment, if I remember correctly, the pool with the highest vote is stETH 2025. So this is just an example of how it works. And thirdly, as a voter of pools, you are entitled to some protocol revenue. So this is again like to align the interests between the users, so the liquidity providers and the voters.
Nice, makes a lot of sense. I really love that. So the I was speaking to Rightside in the DMs, and I was kind of blown away with the trading volume that's coming through. I'm just looking at it earlier, 65 million. Total value locked 57 million. Where are you kind of seeing the majority of that come from? Has there been any kind of spikes that have caused that to continue? Like, how are you guys thinking about that? Are you happy with where it's got to at this point in time? Where would you like to get to, and all that kind of good stuff?
Yeah, so trading volume, to be honest with you, I think it's surpassed our team's expectation. But the main driver of just increasing trading activity was a result of a deliberate attempt to share like yield opportunities on Pendle. So back in February and March period, my co-founder Vu wrote extensive threads about just yield opportunities that existed on Pendle. So the numbers were very absurd, maybe in the range of like 100,000, 500,000% APY, but it was enough for us to get some attention. And then that was, I think, the start of an interest from the community to really pay attention to yield opportunities on Pendle. So gradually, I think from February, we were looking at maybe $200,000 to $250,000 of trading volume a day. By now, the average trading volume hovers at around $800,000 to $900,000. Some days our highest trading volume per day was actually $4 million. It was when during one of the more hectic days. But on average, it's around 800, 900K per day. We think we have a lot of room for growth. Again, because I don't think we have a very strong product market fit, because right now we're still very deliberate in our attempt to attract liquidity and trading volume. So that's our perspective on the trading volume side. Now, in regards to the TVL, sorry.
No, so I was just going to say, is Vu the guy I was seeing with the quite a recent one around GLP using Pendle and Flash Stick?
Oh yes, that's him.
That was great. That was such a good read. That piqued a lot of people's interest.
For sure. I think he's very good with writing strategies, and this is also something that we are very excited about, because there's so many ways you can utilize Pendle to generate wealth. And what we've outlined so far were just very basic strategies. So I think over time, with more user education, we can expect more sophisticated strategies. Maybe people could use options and Pendle, like one of the options protocol, pair it with Pendle and pair it with some other protocols to make a more cohesive trading strategy that fully utilizes the composability of all the DeFi protocols. I don't know, but it's just very exciting to expect that to happen. And I think, like, so far the TVL growth has been very encouraging. Again, I think it's still a long way for us. There's definitely a lot more that we are looking to build. So a case in point, right? Because I think we're targeting maybe a feature launch once every quarter. For this quarter, I think by the end of Q2, we hope to be able to launch a revamped UI for the simple UI, simple interface. Because right now we think that there are still areas that we can improve on, and even though the asset at a discount seems to resonate with some people, we're not seeing a lot of uptake on that front. So we are going to make some changes and promote it more aggressively to our target audience. So this is something that we can expect maybe by the end of this quarter.
Nice. Yeah, so with that's really interesting you mentioned options, because I can't remember who it was off the top of my head who I was speaking to recently, and they were on about kind of trying to tokenize options on chain and have like their own kind of AMM and stuff. So that would be really interesting to see. I think the more composability you have, obviously the more strategies you have, the more people use it, because there's more edge to be defined. So that's super. Looking forward to. Maybe it's another Vu thread that I see, it pops up and kind of piques my interest around it. So I'm super excited to see that. So what, again, with that new kind of UI upgrade that you guys are gonna head towards, is that more of a, because it would be on the simple UI, is that typically aiming at more retail focused, or just users that are looking for that kind of fixed yield, that don't want any additional hurdles, or like who's the kind of dream user that you guys are trying to target with that?
Yeah, I think we're envisioning the new UI to cater to the retail users, because I think I think just looking across the different fixed rate venues, because of the yield trading component that happens on Pendle, fixed rates on Pendle are generally quite attractive. So case in point, right? I think if we compare to a centralized exchange, for example, like KuCoin Earn, ETH on KuCoin Earn for fixed rate is published at 1.5 to 2%. But the fixed rate for ETH on Pendle could go as high as 6.5%. And the reason is because of the higher APY that Aura pools are offering. And as a result of that, the discount on PT is higher. So we think that there's a lot of value here that we can convey to users. And if we make a more direct comparison between our product and the other exchanges or centralized asset managers, we could probably see a greater inflow of capital into Pendle.
Yeah, because we know fine well there's huge demand for it. I mean, look at your CeFi, Celsius products of the world, the BlockFi. Like, there was super high demand for it. And as you say, if there was I think people are a little bit more spectacle now, thankfully, even though we had to get
Yeah,
burned
no.
to figure that out. But it's there's an addressable market for it, and I suppose if you can kind of definitely attack that kind of user, I think it only bodes well for you guys in the future, I think.
Yeah, so we're betting on this direction, but it still boils down to just how well we execute. Because I think the market potential is substantial and quite explicit. But as of now, I don't think anyone in crypto has cracked it yet, and we're giving it a try. So hopefully, our execution can be on point and allow us to capture that part of the market segment.
Yeah, I wonder if an uptick in kind of mobile first usage with like the Uniswap app, and there's a few other kind of in-app browsers, and obviously not EVM compatible, but like the Solana phone and things like that. I think a lot of people are very mobile first and would just like that fixed rate on phones. So I wonder how that whole thing plays out. I've been trying to dig into that quite a lot recently, but no, I'm super excited to see it kind of roll out. But is there any additional? I know you said you kind of hoping to get to fully permissionless. Would that be a case for additional chains as well as additional vaults?
Yes, for vaults, definitely it's something in the pipeline because ultimately, from our perspective, as a yield trading venue, I'm of the opinion that like YTPD trading, they are not the simplest and they're not for the retail users, right? It requires you to understand how the Pendle mechanics work in order for you to be comfortable with just taking some positions on Pendle. So further down, at this point in time, I think like it's still an idea that we want to work on, but the idea generally comprised of like a simple vault for users to be able to long or short yield directly on the Pendle app without really having to know what PT or YT is. So yeah, we're still working on that, but we think that having this vault to reduce the barrier for participation would also encourage more trading activity on the protocol.
That's interesting. I wonder if some more kind of incentivized usage, like we've seen a lot of people come to us and ask for kind of setting up these quests and I don't know, incentivizing and go and buy a PT token, go and use a vault or something like that on Pendle would be kind of useful for just like as a customer acquisition channel, because I think as soon as people use it, it clicks, you know. So I don't know if you guys have got anything like that in the pipeline, or I might have overstepped there.
No, we don't have that yet. But to your point, I think the way I would think about it is we will have to try different iterations of maybe different interfaces, just iterate with the product first. And if we see any kind of organic adoption of some of these features, then we can amplify it by using some incentives to sweeten the participation. So just to build up on what you mentioned, I think the right steps for us to take is to work out an interface. And with an interface, we experiment with different groups of users and see the response. If the response is positive and we see organic adoption, then we would invest more marketing resources to get more people to use it or give it a try.
Yeah, I love that response because we have kind of someone who's came on to do a lot of like the basic business operations at Blockmates and stuff, and I'm in your camp. I'm like, test everything. Doesn't have to be perfect. Let's get it in front of people, see if there's an uptick, and then lean more heavily into it. Just A/B test everything to death. I don't think a lot of projects do that. I think a lot of projects like to stay in their own lane, plan, they know best. We obviously know best. We're working on this all the time. So what you see is what you get, and we're going to put out what we think users want. So that kind of dynamic of just kind of A/B testing and seeing if there's an uptick and leaning into it, I think that's really, really important. But you don't tend to see a lot of it in this space, which is kind of, it's a bit surprising, to be fair.
Maybe, I guess, like, I'm not sure why, but I think one reason could be that because in DeFi, a lot of it is contract, and you don't really want to rush out a contract because it could contain like potential vulnerabilities that you might not think of. That's possibly one reason. But I think if you're running a product that is, let's say, if you're forking a Uni V3 contract, and you're just doing a new interface, have a different way of acquiring users, there's no reason why you shouldn't be trying out the different acquisition strategies.
Yeah, because user flow is so important, and kind of removing friction and not having too much to kind of confuse people, and just getting that kind of user journey perfected as soon as they land on it. Like the back end's completely fine, but if you're messing around with the front end, I would like to see a lot more people do that, particularly if they're trying to tap into markets that would be kind of catering towards, as you say, more retail or kind of new market participants.
Yeah.
So that's an interesting one.
Yeah. For sure,
So
for sure.
Is there anything else that we haven't covered that people should be out on the lookout for? Just as a bit of kind of a heads up, might want to start paying a bit of attention to this, or have we kind of covered everything there?
Yeah, I think I've shared most of the things that I wish to share. But definitely, yeah, if it helps, it's always good to just follow our socials, just so that we can stay in touch. Yeah, but otherwise, I think like there like we still have a lot in the pipeline, and there's no way we're stopping with just like, yeah, at this point, because I think now with a little bit of traction, it 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 it's inspiring. I think it just shows some early promises in how our product can become. We are going to double down on education. We're going to double down on growth and business development while we continue to improve on product. And then I think the other important thing is like we need to continue to stay on top of trends, because crypto moves so fast. And if we stop evolving with the market sector, there is a very high risk that we might become irrelevant. So we need to keep that in mind, and we hope we don't become irrelevant because of this negligence.
Yeah, I think the beauty of your product, though, it's very set up to move for the times. As long as there's kind of yield involved or whatever iterations of the project come, you guys have got some kind of narrative hack that just comes alongside with that. As you say, everyone was pinning you guys in with like the LSD basket of products and assets and things like that. So it's I think you're in a great position. As I said before we jumped on, I'm really, really happy for you guys that you're starting to see the kind of traction and recognition that you deserve. There's all too many kind of very low efforts, copy paste projects out there that, for better or for worse, do their thing in the markets. But I love to see anything innovative kind of picking up and gaining traction. So kudos on that. But yeah, I suppose you've mentioned like people can jump in Discord, I just go and try it out. Like from me, anyone listening, just go and give it a go. Head on to the advanced section and go on the learning tab. It's fantastic. But yeah, if there's anything else you want to kind of leave us with while we kind of wrap it up, I just want to kind of thank you for your time. I'm sure you're really, really busy at the minute. So yeah, thanks for coming on.
I truly appreciate the opportunity, and really appreciate that you're speaking with me. Thanks a lot for having me.
Yeah, welcome anytime. And when these kind of product updates or whatever you guys are doing in the future, you just shoot me a message or get Right Side to shoot me a message. We can run it back once there's something that you want to get a few more eyes and ears on. Happy to have you anytime.